So interest rates are definitely on the rise. I mean, we saw the Bank of Canada state transitory inflation for over 2 years, and they kind of held that overnight lending rate low for maybe a little bit too long. What we had was our projections for 2022 was 3.25% increases in all of 2022. That's at the beginning of the year. Then all of a sudden in late February, the war got launched in Ukraine. And what that did was it really just drove up inflation numbers across the globe. What that's done to our projections now is, 8, maybe 9.25% increases. We've already seen 75 basis points in March and April. We just saw 50 basis point increase June 1st, and we're actually projecting another 50 basis points in July. As long as we put a strategy in place, we can then implement a plan that works for the next 1, 3, 5 years. Some of our clients are even taking 3 or 4 year fixed rates today. They don't really want the variable because the fear of it increasing, they don't want to have to pay attention to interest rates. They also don't really want to take a 5-year fix because it's gone up so much in the last 6 months. So what they're saying is, let me just take a 3-year fixed, a little bit lower of an interest rate than a 5, kicks the can down to 2025 when hopefully we're in more normal times and we're not discussing or fearing the inflation that's happening right now. But just know this, over the next 6 months, whether you take either product, you're going to be paying a higher interest rate. As long as you plan accordingly and we put a strategy in place that works for you, then we can adapt.